Sorry about that, guys. It's fighting me right
You
now.
have nowhere to go. Don't be nervous. We're just at home. Right, Brian? Brian,
Yeah, it'll be great.
I'm going to ask you a favor. There is a bag that's hanging from the door and it's taking away from concentration. Maybe you can take that.
Alrighty, guys, we're live.
I'm Brian's mama, right, Brian? I've always been his little auntie.
Alrighty, we're live, guys.
Okay.
Cool. Okay, here we go. I'm going to tag a few folks in here that I know are interested. There we go. All right, I'm just gonna go ahead and get started. Thank you guys so much for joining me. What we're gonna be going over today is first-time home buying during COVID-19 and what the market has kind of done to Southern California and what we should expect and how you can best take care of yourself and your family during this time, specifically when it comes to home buying. So a little bit about me. I've been interested in real estate since 2016 and got my license last year. Ever since then, I've kind of just been going all in and enjoying the process while I'm doing so. In the state of California, I'm considered a real estate professional. What that means is that I'm prepared to walk you through the ins and outs of home buying process. And what I like to say is think of it as I'm metaphorically holding your hand through a forest so that I can help you out as much as I can. I also like to think of myself as like a real estate search engine. I can answer any questions that you guys have throughout the real estate process, before, during, and after. And then I also like to say that, like, if I don't have the answer, I know exactly who to go to get those answers to as quickly as I possibly can. Now, in order to begin the home buying process, the first thing I recommend to everyone is to speak to a mortgage loan originator and or Brian McKim, who's on this call. And he'll go into a little bit more about what it means to get pre-approved, but getting pre-approved in Southern California, and especially during COVID-19, is super, super important. But getting pre-approved makes you a competitor with the cash buyers that exist in Southern California, and it also makes sure that the sellers know how serious you are as a buyer. We don't want buyers being wishy-washy. Sellers typically run away from that, and when they don't have a pre-approval letter, that can typically scare them off. So getting that pre-approval letter is super, super important. Highly, highly recommend it. And Brian McKim is going to be a great resource for that, and he can help out with any of those questions that you could possibly have. When you begin the home buying process, I like to say that you typically pick the neighborhood and then you pick the home. So what you want to do is find a neighborhood that kind of meets the criteria that you're looking for. If you're looking for something that's really close to freeways so that it's easy to get to and from work, that's a great place to start. If it's really important for you to have like grocery stores nearby, that's something to keep in mind. Figuring out what kind of neighborhood you want to be in will greatly affect the way that we begin the home buying process. We can narrow out the neighborhoods that are super important for you, and we can weed out the ones that aren't meeting that criteria. Because ultimately, the quicker that we react in this market, the better off you'll be. You'll waste less of your time, you'll waste less of the seller's time, and ultimately get you into the home that you actually want to be in. So think about what kind of neighborhood you want to live in, and then we can go from there. Los Angeles is quite large, and figuring out what's important for you will get you into the right neighborhood. After that, we start looking at the homes. I like to also say is figure out the top 5 things that you want in a home so that we can narrow out everything else that we do not want. So if having a barbecue area is important for you, that's something we need to keep in mind. If having a pool is important for you, that's something we need to keep in mind. However, if having a large kitchen because you like to eat out is important, that's something we need to keep in mind so that when we see the property that meets the top 5 criteria, we can move on that property quickly with that pre-approval letter, and we can get the ball rolling as quickly as we possibly can. Because like I said, Southern California moves quick, and honestly, the early bird gets the worm. Now I'm going to hand it over to Brian McKim, who's going to talk a little bit more about his line of work and what he provides to you guys. Here we go. Brian?
Thanks so much. Well, hi, everyone. I hope you're doing well. I wanted to talk to you today about the mortgage process in general, as well as specific to kind of the times that we're in and some of the changes that we've seen in the last few months. I would say, at any time, whether it's 2020 or years past, getting pre-approved is so critical to this process as a home buyer, because it enables you to be prepared, educate yourself as to your options and what's available, what to expect in terms of payments, in terms of what you qualify for, closing costs. And I want to reassure everyone that it doesn't cost anything to get pre-approved. My job is to give you great service, answer all of your questions, hopefully earn your trust, and then eventually, once your offer is accepted, then compete for your eventual business. But the pre-approval process, there's no cost, there's no obligation, and it's really a preparation process as well as an educational process. You want to know your budget and, again, what to expect in terms of payments. And especially now, guys, especially now during COVID, we've seen some guidelines change over the last few months. We've seen rates change. We've seen certain programs go away. It's a great time to buy. And we're pre-approving people every day. People are getting loans every day, but some things have changed. And so before you get too deep into your home search and going to view properties, you want to know, and your agent wants to know, and then when you make the offer, the seller is going to want to know that your financing is secure and ready to go. And so there's a difference between like a pre-qualification, which is something you can probably do yourself online, doesn't really require any documentation. It's a very surface level look at your loan scenario. And quite honestly, it's not worth very much. What you really want is a pre-approval, or actually even a full underwrite of your loan, meaning looking at the credit, looking at pay stubs and bank statements and W-2s and tax returns, and making sure that your whole situation meets the current guidelines in terms of income, in terms of credit, in terms of assets and down payment. You really want to make sure that you're approved. The basic documentation that's needed, basically it's going to be 2 years of taxes. Sometimes we can only use 1 year of taxes, but we usually ask for 2 years of W-2s, the most recent 3 paycheck stubs, and the most recent 2 months of bank statements. Now, everyone's situation is a little bit different. So if you're self-employed, or you have your own corporation, or let's say you were in school and just graduated and now you have a job, all those situations are going to require different documentation, but those are the basics. And so once we get that documentation, we can typically review it in detail, basically underwrite the file, typically same day, sometimes within like an hour, but certainly within 24 hours. So it doesn't take very long. Again, there's no cost or obligation for the pre-approval. Now, here are some things that have changed because of COVID. So for self-employed borrowers, you can still get a loan, but it's a little bit different now than it was maybe a few months ago. Generally speaking, we would go based off of filed tax returns and use those tax returns as income to qualify the self-employed borrower. In addition to those tax returns right now, many banks and lenders, we want to see recent bank statements showing that the business is still operational and still earning money. So if you are a self-employed doctor or lawyer or restaurant owner or truck driving company, we just want to see some recent bank statements to show, hey, even though despite COVID and the shelter in place, the business is still running, you still have deposits. Another area of change in the last few months has been what they call non-qualified mortgages, more commonly known as like stated income loans or bank statement loans. For a while, like for most of April and most of May, those type of loans where you don't really show tax returns, you don't really show traditional documentation for income, those loans pretty much went away. They're starting to come back slowly as the economy kind of opens up, as things seem to improve. I think we're going to see a return of stated income loans, but right now they're a little bit more difficult to get. We're still doing full appraisals for the most part, and we haven't really seen much change there. And the last thing I would want to say, unless anyone has any questions, is just from my perspective, the market remains super, super competitive in most situations. And so again, I would really want to encourage you, you can give me a call, or there's a lot of good lenders out there. There's a lot of bad ones, but there's a lot of good lenders out there that you can call and get pre-approved. I would say do everything you can to put yourself in the strongest position possible, because there's generally not a whole lot of time between when you see that house that you fall in love with, and then when you have to make an offer, and then once your offer is accepted, everything moves pretty fast. And certainly the loan piece, from the appraisal, loan approval, loan disclosures, everything needs to move very fast in this market. So get yourselves prepared. It doesn't cost anything. It can be kind of fun. It's educational, and would love to help.
Yeah, thank you so much, Brian. I'll say with extreme confidence that you are one of the good lenders that are out there, which is why you're on this call. Thank you again for that. And then I'm actually going to hand it over to Lucy, who is with First Trust Escrow with our office in Burbank, California.
Hi, everybody. I'm Lucy. I've been working here in escrow for almost like 9.5 years. And what I want to talk to you guys about tonight is how to prepare yourself for escrow as a first-time home buyer. A lot of the times what we see and issues that we see when escrow is open is the smallest little issue can be your names. So if you have a contract that you worked up with your agent that says your name is Lucia Garcia, you have a pre-approval with Brian that says Lucia Maria Garcia. Now you go into escrow and you want to change your name to something completely different. These little technical issues can cause about a week in delays in vesting insurance information. So what I would just encourage you to do is sit down before you write an offer with your agent and think about exactly how you want your name to be on title for your new home. If your middle name is not important, then I would think just leave that out for your pre-approval, your contract, and anything moving forward, because what we need to see is consistency. So all your loan application, your contract, and your escrow documents all match. So that's just one little thing. Just keep in mind how you want your name to read. The second thing is for your deposit. If your agent doesn't talk to you about this, you have about 3 days once your offer gets accepted to bring your deposit into escrow. Sometimes we get buyers that call in and say, well, what account do we need to use it from, or how do we get the money into escrow? At this point, you should have already had a conversation with your lender to show them out of this bank statement is where the money is going to be coming from. So that's where you also want to be consistent with, is you don't want to be pulling money from different accounts to bring in the deposit, because it can also cause delays at the close of your escrow. So that's my second pointer, is just, again, have that conversation, have that earnest money deposit ready to go. So when your offer gets accepted, there's no delays. You can wire your money same day, and that can show that the seller that you're committed and you're ready to go. The third thing I want to talk about is your escrow package. When you get into escrow, you're going to receive an escrow package via email or mail, your preference. And what we do encourage you to do is return it within a week. A lot of buyers want to hold on to that package because they have so many questions, or they haven't done their inspections. But even if your escrow doesn't go through, complete the package, start familiarizing yourself with the forms, and submit it within the week, so we as escrow can have everything we need from you all ready to go. After your package is submitted, in that package, it's gonna ask for your vesting information, how you want to hold title, and again, this all goes back to your names. who's going to be your insurance company? Did you already start shopping for insurance? If you haven't, a good thing to do is, even before you start writing offers, is also reach out to your insurance agent, whoever you have your car with, or anybody that you kind of want to check out, and just let them know, hey, I'm looking to buy a house. What are you going to need to give me an insurance quote when I'm in escrow? So you can have that list also ready to go. So when we ask you, hey, what's your insurance information? Or when Brian asks, what is your insurance information? That's ready to go. And again, no delays. So the goal here is to be ready for all the little items that are going to come up through escrow, so there's no delays. Sometimes it can cause a day, 2 days, or even a week. And again, these are just things, if you're prepared, there's no need to be delays. And the fourth last thing was, once you do your package, you're pretty much not going to hear from escrow until we're ready to close, because you're going to be working with your lender in the loan processing. When your loan is finalized, when you sign your lender's closing disclosure, that's when you're going to be getting a call from escrow to schedule your loan document signing. This signing is where everyone says it takes an hour, it takes 2 hours, your hand's going to hurt because it's so many documents to sign. That's not true. I want you to it's a-okay. The loan documents are, yes, about 100 pages, but you sit with me, we go over the package with you, and it's smooth, it's easy. And because of COVID, our office was closed for the first month or so. So what I was doing is I was going to your home to do the loan doc signing at your home, but in the backyard, in the front yard. We had to get creative with the way we did signings, because to be safe on both sides, I wouldn't go into your home, and vice versa. So what we had to do was we would sign on the porch, the back of a car. So that was, I think, the biggest change. And during COVID that's the only thing we had to change, is the way we handled signings, because instead of coming into the office, now we go to your home. But since things are opening up and our doors are not technically open, but we're here every day, what we're doing is we're meeting clients in our lobby, because it is a large open space, and we're doing the signings downstairs. So in short, everything's still going smooth. Transactions are still happening. People are still buying. People are still selling. But the change in COVID is, again, that last closing step, where before I was sitting right next to you, we're going through everything. Now we're just a little bit further apart from each other. And it's either I'm going to your home or you're coming to our lobby and doing the closings here, versus being too close together. And again, that's it.
Thank you so much, Lucy, for that. And what I'm hearing from both Brian and Lucy is that you both got very creative on how to help your clients during this time. And that's something I'm super proud of, being part of Kelly Williams and being in a network with you guys, is that we're willing to get it done however it's necessary. And I think that's great. And I'm super proud to be a part of that. And then the last guest that we have tonight is Mary Kay, who is with Advanced Property Inspections, and she is awesome. So super excited to hear what she's got to say for us.
Hi, everybody. Hi, Greg. Hi, Brian. Hi, Lucy. Well, yeah, Brian, I know Brian for many years, and he's done my loans too. So Brian, you don't need to send them anywhere else, by the way. They have to come to you. So, I guess maybe not have, but want to come to you. So what we do is, so Greg, or whoever you're hiring for a realtor, of course, I highly recommend Greg. Now he found a house for you. There is a contingency period in the purchase contract. It's 17 days to do your due diligence and do your inspection. Nowadays, Greg can agree with me or just disagree, but I know that's what's happening. They can make that shorter. They can be 10 days, they can be 8 days, they can be 7 days. So what you do is that you ask your realtor, how many days do I have? Because now that's part of the negotiation. So negotiation is not just price, it's also terms. One of the terms is inspections. So then you find out, he can say 5 days, 10 days, you might even have the 17 days. But it's very important for you to call the day your offer was accepted. Many times you write an offer, you go back and forth with counter offers. So it's the day that the final counter offer was signed. That's when your contingency will start, and I'm sure Greg can explain that to you. So once that's done, either your realtor or you give us a call, or anybody that you find. You can Google them. There's a lot of inspection companies, and you give them a call, and you have to ask them certain questions, because now they are the ones who are going to come into your property and tell you the condition. I always explain this like going to the doctors for physical checkup. So now this is a physical checkup for the house. The inspector comes in, checks every detail in the home, 12 major components of the house plus more. I'll go to it in a second, but that's when it's important for you to, before you hire your inspection company, to ask them certain questions. If anybody needs to know that, besides me telling you this, you can go to our website. Maybe Gregory can send that information. I don't know how they can figure that out. agpic.com. That is an educational website where it will tell you how to choose the most qualified property inspection company, because the state does not regulate this business. There's no license required, no insurance required, no certification required, no experience required to do property inspections. So now it's very important. That's why I say it's important for you to, have your realtor guide you. Because just like Greg has us on this amazing buyer seminar, they know how this works. So they always work with most qualified vendors. So you can ask them and say, would you want to schedule it? If you don't want that to be done, you can ask them for their referrals. Who do they know? And plus now you can go online through Yelp or through Google. You can find a property inspection company. So the question should be, number one, are they licensed? Well, many people will say, I'm not licensed. I don't need license. The state doesn't regulate it. Please hang up the phone. Because many companies out there are licensed, meaning they do have a contractor's license. That means that they've built before. So the moral of the story, the simplicity is that anybody can do inspections. So if you're hiring someone, if they've never built before, they have no experience in construction, it's like hiring a doctor who's never gone to medical school. So that first question should be, are you licensed? If they say yes, ask them for their contractor's license number, and they can have that all done. That is just the simple thing of emailing you right away when you're on the phone, their contractor's license number. It doesn't have to be active, because that doesn't mean that they have to build now. It's meaning that they have built before. Number two, you have to ask them if they have an E&O insurance, errors and omission, which means that when we're there, we inspect the property, we tell you that the plumbing is fine, the roof is good, what have you, and now you move in and your roof is leaking. Meanwhile, we had told you that the roof is fine. It still has 5-10 years to go, right? Now, who do you call? You call the inspection company. If the inspection company does not have an E&O, which again is not required, the state does not require that. The state doesn't require it. So now who do you go? So that's why E&O is important, and make sure that you ask for that. So then they have to come in, take an inspector out there and find out if they did miss that and take care of it. That's what that insurance is for, errors and omission. And then make sure they have workman's comp, because workman's comp is for example, I was at a seminar before COVID, and there was an inspector from another company that fell while he was doing an inspection for a client at a seller's house. When he fell out of his ladder, he hurt his back. So he was hospitalized for a while. He sued the seller because seller had homeowner's insurance. He didn't have any workman's comp. So that's not a good sign. The seller wouldn't even want to work with you after that, or it will be difficult because now they have a lawsuit going on. So you need to make sure that please ask them for workman's comp. It's easy. It's part of E&O. It's not that expensive for them to buy. And the third question is, are they members of any inspectors association? I don't want to go through all of them. CREA, California Real Estate Inspectors Association, is the oldest one. And so what they do is they take us to 40 hours continuing education every year. We have to be there. Now, of course, it's a Zoom way of this, super duper way of doing it. And once we finish that, then we are again another year certified. And what they do is they come in and teach us all the new stuff. What happened in what city, in what state, what's new, what did the inspector do? Did they miss anything? So if they missed anything, what else are we incorporating with the inspection? That's that. And number 4, always ask them, how long have they been doing inspections? Over 5 years is a good number. That means they have a lot of experience under their belt, and they've already, especially if they don't have any contractor's license, at least they learned. So once that you do that, so I don't want to go through this. This is like Brian and Lucy. We can go for hours, but I want to put it in a nutshell. So now we come in and we schedule the inspection. We come in, we check everything. The roof, foundation, electric. We go under the house. We check for plumbing, if it's copper, if it's galvanized, if the property is bolted, if it's not bolted for earthquake purposes. It's electrical, water, 12 major components, and plus more doors, tracks, if the property has any earthquake damage, or from water heater to foundation, if there's any geological problems. So once we do that, I advise you, please go to the site. When you go to the site, we go over the whole report with you. Once we're done, we walk you through it. You can follow us. We show you what we found. And, we tell you how to fix the problems. We don't give you a price. That's not allowed to do because, like I said, we're just the inspectors. We're not doing construction at that moment. So, but we can always, you will always know how big or small the problems are. We always point out a lot of good stuff too. So it's like going to the doctors and you have your blood test and so many things are amazing. And you have a little bit of a, maybe you ate something fattening and your liver shows like it's, the numbers are up or down, or maybe they hear a murmur in your heart. So we look at all the good stuff. Oh, we're awesome, and this is this, and we'll fix this. So this is for you to know what you're buying. It's not just many times. I hear they'll say, "Oh, I'm going to go renegotiate and get so much money back." That's not how it works. I think, of course, you might get money back, but this is for you to know what you're buying. Just like in old times, we always bought old cars. When I came to America, I was 20 years old. We bought a $500 car. Every week that car had a problem. My husband was underneath the car fixing stuff. But when we bought it, we brought a mechanic. And now when you buy a new car, you go test drive, right? So it's the same thing. You just want to make sure that what you're buying is, whatever you're buying, the condition. Because if you know something, you're fine. When you don't do this and later, when you find out there are problems and you didn't do your inspection, that's when problems start. The inspection is not mandatory, it's advisory, but I advise every buyer to do it because it's important for you to know what you're buying. With the COVID, and like I said, anytime, Greg, any of them, anybody that is listening to you, if they need to know more, they're more than welcome to give me a call. I can go over so many items about inspections. With COVID, what happened is that we didn't become non-essential. We were essential business. But like Lucy said at the beginning, of course, no business. Everybody was, we were all like, wow, what happened? It feels like life stopped, right? So then slowly it started. Maybe 2 weeks later, we started getting inspections. So what we do is we have some requirements. Sorry, that's my ice maker. So what we do is we have our gloves, we have our masks, we have our booties, and we do sign the PEAT-V, which is a sign that Greg will tell you about that. It's the disclosure that you are sending that to us and it letting us know that, about the COVID-19, if we have all our gears and the seller knows that we're getting in and the buyer knows and all that. So we do sign that, and for you guys and for Gregory, and then we come in. And at the beginning, everybody, of course, and also now too, we're nervous, but it was, complete craziness, right? We were even worried to talk to our husbands in the house and washing hands a million times, even though I was all by myself, I was still washing my hands 100 times a day. So at the beginning, people were not coming. The buyers would not come, and it was fine because when it's best to come, but then we would go over the whole report on once they received it. The report goes to them between 24 to 48 hours, but if they need it, we can do it the same day. It's 100-some pages of report with pictures. Then we go over the whole report on the phone, and every real inspection company can do that. And now they know what they're buying. I don't want to take too much time. There's so much to talk about. And I'll be so happy to do this again with you, Greg. Maybe you can start doing classes for each one of us. We can do that. But
Yeah.
inspections are, like I said, they start, the first thing, you of course pre-qualify yourself. That's amazing. I do that all the time. Anytime I want to purchase something, and not that I do a lot, by the way, in my house. And so then once you do that, and I wish I could, once you do that, then you do inspection. And also the escrow, we'll see. But inspections are very important for you to start as soon as possible, because if we find a problem, then you need to bring a specialist. Let's say if we say the roof has a problem, it has 1 or 2 years of life. You want to know how much it's going to cost you to fix it. That's when you have to bring the specialists in to find out how much it's going to cost you to fix the items that we found. So that's why it's very important for you to schedule it right away, so you have enough time to bring the specialists. Then next, Greg will know what to do with those findings, right, Greg?
Yeah, most definitely. Yeah, knowledge is power. The sooner we can get that knowledge, the better, which is why we want the inspector in there within like ASAP.
Yeah.
And Mary is great about responding quickly and dispatching somebody out to help everyone out as quickly as
Thank you.
possible. Of course, I know that all of us can talk about real estate for a very, very long time, but we do have a few questions, and I'll go ahead and read one out from one of my best friends, Mario Segala. And if you guys have an answer, feel free to hop in, but I'll give my short little spiel first. So the question is, in y'all's opinion, is the best amount to have a down payment on a home that will allow you to have a low mortgage payment, or a good mortgage rate? So Mario, mortgage rates right now are insanely good, and I'll let Brian talk about that a little bit more. But it really just depends on you and your budget and what your goals are. And I can sit down and that's what I do. I help you figure out exactly what your goals are and what's important for you, and how we can finagle that to make sure that we find a home that's right for you, along with the rate and along with the monthly payment that makes sense for you and your budget, and ultimately your goals. And that's honestly the part that I like the most. It's finding somebody, the all around package, not just the home, not just the neighborhood, but the financial part of it that makes sense for you, and making sure that you get to where you want to be getting to. And that part is the most exciting part for me. So we can definitely sit down and talk about that. But Brian, if you want to answer a little bit more about the rate.
Yeah, so when somebody's putting less than 20% down, in most cases, they will have some form of mortgage insurance. But keep in mind that the mortgage insurance is not there for the life of the loan. So it's generally something that can be dropped between 2 years and 5 years after purchase. So I would say, yeah, if you can put down 20%, there's definitely advantages to doing so. But I would say there's many, many, many people right now getting approved and buying homes with 5% down, or 10% down, 15% down, sometimes 40% down. So there's a wide range of down payments out there. If it was me, I definitely, my personality and what I would like, I would want to have some money in the bank and not necessarily put all of my money towards the down payment and closing costs. So if somebody feels the same way and wants to maybe put 5% down or 10% down, and then get rid of the mortgage insurance in maybe 2-3 years, a lot of people do it that way. If you have 20%, great, even better. But don't go away from this class thinking that you need 20% down, because that's not the case.
Right. So you kind of half answered another question from another one of my very good friends, Bianca, which is, what if your credit is bad, but you have the down payment? So Bianca, there's actually a lot of programs out there for people who have bad credit. And you and I can sit down and talk a lot more about that, and find out a product that works for you. But Brian, if you want to expand on that, feel free.
Well, I would say you definitely don't need perfect credit to buy a home. So you don't need to have A++ credit. There's advantages to having a higher credit score, and typically that'll translate to a better rate. But if you have a 660 credit score, if you have a 680, and generally for most programs, that's acceptable. Certain programs, you can go down to 640, maybe even 620. We have seen some things tighten up over the last couple of months. But when a loan gets approved, it's kind of like the legs of a chair. So it's not just income or just credit. You kind of need to have a combination of everything. So you have to show sufficient income, you have to have sufficient credit, you have to have sufficient down payment. And then of course, the fourth leg would be the appraisal. So we want to know, okay, is the house that you're buying, is it valued at the contract price or below contract or above contract? So it's really, all those things have to click for it to work. But as you mentioned, I mean, there's a lot of things that people can do with their credit. It might take some time depending on the situation, but if somebody doesn't have very good credit now, if they put their mind to it and make a concentrated effort to improving the credit, it's definitely possible.
Cool. And Brian, would you recommend if somebody has bad credit to still come talk to you, or should they just hold off until their credit gets better?
I would still like to talk to them because I'd like to see why it's bad credit. There might be some easy fixes to get their credit score higher. There's other situations that require more time, more money, more effort. So we need to figure out what's going on with the credit. Is it balances? Is it late payments? Is it collection accounts? Once we know what the issue is, right? Like kind of like a doctor, once we know why they're having this pain, we can fix it.
Right on. Cool. Good to know. So I want to point out a few things before some more questions come through. Is something that we've all talked about is the need for speed. Every single person on this call has mentioned taking care of their specific service as quickly as possible. And it's important to remember that not all service providers are created equal. Some service providers are great, some providers are not so great. And what's great about this specific call is everyone on the call is very, very good at what they do, and they're very, very quick. And again, in Southern California, speed is vital to make sure that you're getting into the home and the neighborhood that is most important to you. So what we've been doing on the real estate side, at least for like the realtor end, for protecting our clients during COVID-19 is virtual tours have become absolutely incredible. You can actually measure out exact widths and measurements for certain sections of a property, and which has been great. So people can weed out what they like and what they don't like a lot quicker. It is a little bit more difficult to schedule showings now, which is a good and a bad thing in that you can't see every property that you actually would like to see. However, it kind of weeds out the ones that you most likely weren't going to choose anyways. And it kind of narrows it down to the top 3. And that is a great thing in that, like, you're no longer wasting your time, and maybe rates change around the time that we see the property that you want to see and get into. But nevertheless, like, we're making sure that you get into the right neighborhood and the right home that you want to be to, regardless of how long it takes. So let me check really quick to see if we have any other questions, but I think that may be it. Oh, here we got another one from my friend Mario. What would be, in your opinion, the best minimal credit score to have positive mortgage effect? So Mario, let me see if I can understand that question correctly. What's the minimum credit score to have to get a mortgage rate that makes sense for you? I'm going to assume that that's what the actual question is. Again, I think it's going to be a great question for Brian.
Well, that's a bit of a difficult question to answer because it all depends on the exact loan scenario of the client. I would say in this environment, a 660 or a 680 would be good. Basically, the way lenders and banks price their loans is every 20 points on credit gets an improvement on the rate. So 660 to 680 to 700 to 720, then 740. And in most cases, anything above 740 is going to be considered top tier. In some cases, anything above 760. So as you mentioned, rates are really good. And even with a 640 in some cases, or a 660 in some cases, depending on the, let me just say, I mean, when somebody says, what's my rate? Let's talk about rates. There's so many factors that go into what somebody's rate is. And I think that is a misunderstood topic that most people just don't understand. It's not just one size fits all or two sizes fits all. It depends on the property type, whether it's a condo or a single family or a duplex, depends on credit score, depends on down payment, can depend on debt to income ratio, can depend on how much somebody has in reserves after closing, can depend on how long the rate lock is for, can depend on loan amount. So is it 510,000 or less or above 510,000? Is it a jumbo loan? So there's so many different inputs that go into what rate somebody gets. So if you have any, specific questions, I'll be happy to kind of run some scenarios, super chill, no problem, no pressure. But it's a little complicated to kind of just answer it because there's so many things that determine the rate.
Lots of variables for sure. So Andrew Graves asked, this one's for you, Mary. What if inspection reveals ghosts?
Okay,
Oh.
I just unmuted myself. Yes, because I have a doggy. I didn't want him to.
No problem. Okay, so Andrew Graves asks, what if the inspection reveals ghosts?
We haven't come up to one yet.
I don't think you're looking hard enough then.
Yeah, that has not been an issue yet, and I don't think we can tell. I don't know if we can differentiate about ghosts, but yeah, that hasn't come up yet.
Fair enough. Thank you so much, Mary Kay. Okay, so Nazi asks, is everyone here is based in Southern California, or do we have experience and connections with people in Northern California? So typically speaking, Nazi, A players know A players. So I for sure can refer you to somebody in Northern California that can help you find out what you need and what your goals are. Brian can help you out from, actually, I'll let Brian answer this. So Brian, can you help somebody who's moving up north?
Yeah, I'm licensed for anywhere in California.
Right on, cool. And then I am too, but I specify in Los Angeles and Orange County area. What about you, Lucy? Can you help somebody out that's moving out to Northern California?
Yes, usually the seller picks the escrow company. So if we have a buyer that's here in Los Angeles that's moving up to the Bay Area or wherever they may be, the seller is going to pick the escrow company that's based up there. So I can help answer any questions. And what we actually have, when we do have buyers that are buying, not even like up north, out of state, and they're still here in Burbank or in LA County, what they do is the closing, they will email me the loan documents and we can handle the signing here. So they don't have to fly anywhere or go do anything. Like everything can still be done remotely. Through FedEx, we FedEx the loan documents back to wherever the escrow is. So that's not a problem. And it's all doable.
Right on. Thank you so much, Lucy. And then Mary Kay, I'll also let you answer for yourself. Can you help somebody who's moving into the Northern California area?
We do inspections in LA, Ventura County, LA County, Orange County, nothing else. We do some outside LA County. Let's say we were in San Francisco, did a hotel 4 or 5 months ago. Mm-hmm. But for the most part, we serve LA, Ventura County, LA County, Orange County, and the surrounding areas.
Right on. Cool. Well, I think that's great, Mary. I think that's about all the questions that we have. If anybody wants to follow up with anyone who's asked questions, I'll reach out to you or you can reach out to me. Let's get you working to where you need to be getting to. Thank you to everyone. Thank you, Lucy. Thank you, Mary Kay. Thank you, Brian McKim. Thank you to everyone who joined us and everyone who asked questions. I hope you guys have a beautiful evening.
All right.
All right. Good night. Good night.
Good night, guys.
Good night.